So for our next address today, we are going to be hearing about leadership for new economic realities. And this address is going to be delivered by Ahmad Mobeen, Senior Economist, Asia Pacific, S&P Global Market Intelligence. Please welcome him to the stage.
Hello everyone, Assalamu alaikum. Thank you very much for having S&P Global Market Intelligence here at the Future Summit. We've heard about very interesting and super insightful discussions and dialogues so far on Pakistan economy, and we at S&P Global Market Intelligence hope to contribute to that and take it a step further. Just a bit of an introduction and a disclaimer before I begin. S&P Global Market Intelligence is the data, solutions, and analytics business of S&P Global, and is different from S&P ratings. So any comments we make cannot be associated with S&P ratings. With that in mind, I will begin the session by sharing S&P Global Market Intelligence's view on Pakistan's macroeconomic trajectory, basically the recent developments, the story so far, and the economic outlook, which will include S&P Global Market Intelligence forecasts and assumptions. So let's begin. Can we bring up the slides, please, on the screen? Great. Okay, so I will be going over 4 major developments that Pakistan's economy has observed over the past couple of years. First, this has been, we have been over this since the morning a lot of time, but it's worth a recap, that the release of the FY24 GDP growth numbers. So Pakistan's economy have made a recovery after contracting 0.2% in 2023 fiscal year to now grow by 2.5% in FY 2024. This was mostly shouldered by the agriculture sector. And although the manufacturing and services sector, they contributed, they improved and recovered, but so far the tighter monetary and fiscal sector policies meant that their performance was relatively constrained. However, the growth momentum overall, we expect it to continue going forward in FY25, with manufacturing growth projected to become more broad-based and entrenched. And of course, the spillover effect also taking the services sector back to its growth trend. The second development that I want to talk about is the ongoing improvement in the current account dynamics, mainly due to the recently completed IMF FBA program and also the recently started IMF EFF Extended Fund Facility program. So just to recap, in FY 2024, Pakistan's current account deficit reduced by a notable 48%, and this was due to an almost 10% growth in exports of goods and services, and also a similar growth in workers' remittances. Imports growth were relatively constrained, which overall helped the foreign exchange levels to almost double over the year. This progress has continued over the first quarter of fiscal year 2025. And just to go over the numbers, during this quarter, July to September, Pakistan's current account deficit has reduced by a notable 92%, thanks to a 7% rebound in exports and a healthy 39% increase, if you can see it on the graph, in workers' remittances. So overall, the level of foreign exchange reserves in the country have reached $11 billion. The third and related development that we want to go over is with regards to the exchange rate, which has now become stable and hovers around the 278 to 280 mark. And this was the trajectory has become stable, mainly owing to the crackdown on informal exchange rate companies that started in late August of 2023, and of course the progress in disbursement made under the IMF SBA program, IMF EFF program, and also the reforms agenda that the government has started, followed by the fiscal consolidation measures. So all this has meant that the rupee has become relatively stable compared to US dollar. The fourth development is with respect to inflation. Consumer price inflation, as we all are very familiar, it rose to an almost 40-year high of 31% in fiscal year 2023. And this was owing to high commodity prices and also the tariff revisions, mostly upward in energy and gas sectors. And of course, the removal of energy subsidies as well. However, as we can see in the graph on the bottom hand side, It has been on the decelerating trend over this calendar year, January to September. In April 2024, actually, it was the first month in over 20 months that it dropped below 20%. And September numbers were again 44-month low. And this was led by a slowdown and deceleration in food prices. And October numbers are slightly up, but overall, in our projections, the moderation effect is likely to continue. So based on these all four developments, what are the key takeaways? The takeaway is that the economy is on the right track. However, sustained external sector support and, of course, credit rollovers are essential to maintain continuity in this progress. Furthermore, high debt servicing means that fiscal position will remain under pressure, and this highlights the need for fiscal reforms to continue. Furthermore, sustained concessional financing combined with management of current account deficit going further as well will be paramount to ensure that the foreign exchange level and the stability in the exchange rate is continued. So taken together, the overall economic recovery and resilience will be paramount and dependent on the progress under the IMF programs and the homegrown reforms agenda. So with this backdrop, let's go to the economic outlook of Pakistan according to S&P Global Market Intelligence forecasts. First, we believe that the IMF EFF program and also the recent conclusion of IMF SBA program, it has given a bit of a seal of approval to the reforms agenda. However, debt servicing and fiscal sector outlook will remain challenging, and we can see this by these two graphs. If you can see at the left-hand side of the graph, it shows the interest payments as a share of total government revenues. The blue dots all represent the EMGEs, emerging market and developing economies around the world, and the one red dot is Pakistan. So as we can see, it's clearly a bit of an outlier with almost 50% of the total revenue generated is being spent on interest payments. Second, if you see the right-hand side graph, it shows the gross financing needs as a share of total GDP. Again, it shows all the emerging market and developing economies for which this data is available as per the October fiscal outlook of IMF. And Pakistan, again, is an unfortunate outlier so far with debt servicing need almost 22% of GDP. So overall, this means that the foreign exchange dynamics will remain under pressure. This means that the import cover ratio, although foreign exchange reserves have improved a lot, but we project that over the next 4 years, the import to cover ratio, which means that how much are your foreign exchange enough to cover months of imports, they will remain below the international adequacy benchmark of around 3 months of imports. Secondly, our projections of external debt financing will remain high. As you can see in the graph, it will constitute around 4% of GDP and 16% of total foreign exchange earnings. Third development is with regards to the inflation outlook. So favorable base effects will mean that inflation will continue to go down, followed by, of course, the government's continuation of the reforms agenda. So our projections for 2024 is 13% calendar year, followed by a calendar year 2025 projection of 6.9. However, there are some upside risks to it, if you can see in the slide as well. So one is the higher taxes envisaged on the agriculture sector and the services sector, mostly retail, under the announced fiscal year 2025 budget and IMF program. If they materialize, that could lead to a rebound in prices. Second is the continued increases in electricity and gas tariffs that would also add to inflation expectations. Third and fourth are related. They are the heightened global financial market volatility and a probable escalation in global commodity prices in light of Middle East conflict if it escalates further. So that could also bring more pressures to inflation outlook. In terms of exchange rate, we forecast that the stability will continue. However, the stability will be contingent again, and this will be a repeated feature of my presentation. This will be contingent on the successful implementation and continuation of the IMF reforms, unlocking of other bilateral and multilateral sources of financing, and also the continuation of fiscal reforms agenda of the government. So overall, what are the big picture projections? In big picture projections, we expect the GDP to rebound and the growth will continue, and it will grow around 3.3% in 2025 and slowly grow to around 4.4% as of end fiscal year 2028. In terms of current account balance, the deficit will remain more or less contained around or below 1.5% of GDP. In terms of fiscal deficit, it will also remain relatively contained given the historical background to around 6.7 to 6.8% over the medium term. However, the pressures will continue. So overall risks to the growth trajectory or upsides or downside scenarios when we talk about it. So the risks are mostly tilted to the downside. So far the progress has been encouraging and positive, but this has to continue. Overall, one, global commodity prices weigh heavily on inflation risk, as I've mentioned, that any ongoing or new supply disruptions could stall the inflation moderation, and it is likely to exacerbate fiscal and current account slippages. Second, any slippages or pause in fiscal consolidation measures could compromise economic management that has been achieved so far over the 1.5 past year, and it could disturb the progress under the IMF program. Third, such a scenario is also likely to undermine investor confidence if it materializes, and this could hamper growth prospects further. Another point which is very paramount for Pakistan is the climate change implications, because the country remains prone to adverse impacts of climate change, whether to droughts or floods across all different regions of the country. So this will weigh heavily on the economic outlook, and it could also divert crucial resources away from development spending or spending on health and education. So we have to be cognizant of that as well. And lastly, it's also a bit of a worry in terms of long-term projections. That is the high poverty rate and low investment on education and health. So Pakistan's poverty rate as of 2024, according to World Bank's numbers, it has risen to 40.5% of the population. While in terms of malnourishment, around 20.7, or every 1 in 5 individual in Pakistan is malnourished or undernourished. This is a long-term constraint based on both the productivity growth and also welfare growth. So overall, this is also in line with the theme of the Future Summit, what matters now. It's to be aware and cognizant of these challenges. The progress so far has been positive, but we need to be mindful of these challenges and work towards resolving them. That is all from my side. Thank you very much.
We just invite Syed back up for a quick Q&A session. I'm sure you all have some questions. So Syed, are you still here? Perfect. Would you mind sitting down? We can take questions from there. Thank you. Anyone from the audience who would like to ask these two gentlemen some questions, please raise your hand. Someone definitely wants to ask a question. Just raise your hand and we'll hand you your microphones. Thank you. Over there, that gentleman over there. Thank you.
Ji, Assalamu alaikum. Thank you very much, Sayyid Amir Ali Saab and the other colleague for the very insightful presentations. My question is for Sayyid Amir Ali Saab, whether what kind of collaborations you guys are looking forward to in case of expanding the technical vocational education for the Pakistani youth, and whether Mizan Bank is expanding it with other partners as well. Thank you.
So thank you so much. I think it is definitely a collaborative effort where Mizan is actually a financing and a program management partner, but the vocational training piece is delivered by multiple institutions. I can share the list with you, don't want to name all of them right now. And interestingly, a few of the very fine institutions have themselves approached us to enter into that kind of partnership. And I'm sure after this conference also, and I earlier presented this idea at the forum of OICCI, and couple of friends from large corporations offered to join this effort. And they have started partnering with the similar institutions. So it's not necessary they come in and fund Mizan Bank, but then go and follow the same program. So the concept is about creating an impact. So we can train few 100,000 people, but the need is millions of people every year. So 5 million people are coming into the labor force every year. So the impact is for the millions of people. So collaborations are happening both on technical side and on financial side.
Any more questions? Thank you.
Assalamu alaikum. My name is Zafar Aziz Usmani. Really fascinated by your presentation, Ahmed sir. I think you have hit the nail. Where real challenge is the young population, the 63% youth, and their potential employability. They are highly talented, but this was the exactly gap that we needed to fill. And people worry about the brain drain. My concern is that we have enough of raw material to produce and export rather than worry about the few selected who are leaving the job. Our supply side of human resource has to be increased, and your initiative is a fascinating, first time I've heard, and I think this is a great intervention from Mizan. It's a macro level, but I guess, you know, what we need to do is to take this particular initiative and create awareness about this opportunity across Pakistan. There are many banks, financial institutions, microfinance institutions who should buy in. There are good universities and technical institutions who can create this training program. And I think this is a phenomenal idea. I congratulate you. And you know, any support that you need from any professionals from the HR fraternity in Pakistan, we will be more than happy to provide all support. Thank you so much again.
Thank you, sir, for the encouragement and the ideas. And yes, I agree. It has to be propagated, but with success. So we have to show empirical evidence that what we are doing is successful so that other can follow. So I'm actually more about first walking and then talking. So we are trying to walk the path first, and then we will talk about. So even today when I talked about it, my colleague Khalid Zaman and another colleague Suhail Khan from Mizan Bank motivated me to present this here, because now we have some success coming out of this initiative. But thank you so much for your encouragement and guidance.
Excuse me, I have a question here for Mr. Ahmad Mobeen. My name is Tawfiq Hussain. We've talked, you as an economist and other speakers, excuse me, before lunch talked about various aspects of the economy, various challenges, including yours about interest payments as a percentage of GDP, as a percentage of reserves and all. But I'd be curious to know what your thoughts are about the overall debt sustainability of this country.
Thank you very much for your question. So according to S&P Global Market Intelligence forecasts, we see that the debt to GDP ratio will remain stable over the medium term. It will not escalate any further. More or less the trend will continue. And more importantly, it's the debt servicing, because that weighs heavily on your fiscal sector development and spending as well. So overall, we think that provided contingent of IMF program continuity, timely disbursements, and also the announced bilateral and multilateral inflows according to the IMF Article 4 and the EFF program, if they continue and materialize, then going forward over the next 4 to 5 years horizon, we expect debt servicing to be sustainable. And fiscal sector deficit will remain contained around 6.5 to 6.7% of GDP. Yeah.
Tawfiq Saab, I like to do an intervention here. So the numbers of the top of my head of the foreign currency debt is roughly $135 billion, right? And the population of Pakistan is 241 million. So if we divide 135 million by 241, I think the number comes to $500 per person in Pakistan. So $500 translated into rupees is, I think, you multiply it by 3 simply, it's 150,000 rupees. So how many people cannot return a debt of 150,000 rupees in this room? So it's a very small amount. The problem is GDP per capita income of this country. So our GDP per capita income is roughly $1,500 to $1,600 per capita. If we are able to grow it, it's about growth, it's about productivity, then this debt number is just peanut. Because this debt number is a peanut for every single person sitting in this room. If we just grow the GDP of the country and make it safe $5,000 per person, this debt will become meaningless.
What I'd like to draw the attention of the economists over here and elsewhere, other stakeholders, is that the relief because of the reduction in the interest rate locally will be there, for sure, in debt servicing. But the foreign currency debt servicing, I think, is going to be a huge challenge, and we should all be seriously focusing as a country of how we're going to manage it based on your FX flows, which will come in the next few years.
Any more questions from the audience? We have a tiny bit more time. Over here, please. This gentleman over here, could we please get him a microphone? Thank you. Yeah. This will be the last question. Thank you.
Hi, मेरा question आमिर साहब से है. The Mizan Bank is very promising and growing bank. तो क्या आप अटप इकोसिस्टम के लिए कुछ कर रहे हैं? मुझे कोई ऐसे प्रोडक्ट्स नज़र नहीं है जो स्टार्टअप्स को फोकस करते हो, स्टार्टअप्स को कन्वीनियंस देते हो, ईज ऑफ डूइंग बिजनेस. इवन दो स्टेट बैंक के कुछ इनिशिएटिव्स हैं, बट ब्रांच ऑपरेशंस में जब स्टार्टअप फाउंडर, कोई यंग फाउंडर 2 एम्प्लॉयज़ वाला जाता है तो वो उसको उस तरह ट्रीट नहीं करते, फैसिलिटेट नहीं करते. तो मीज़ान क्योंकि ग्रोइंग बैंक है, तो क्या आप सोच रहे हैं कि ऐसी कोई फैसिलिटेशन हो? क्योंकि अगर वे फॉरवर्ड है तो एंटरप्रेन्योर्स ही हैं इस इकोनॉमी के, जो आज सुबह से बात चल रही है, वी आर द फ्यूचर ऑफ पाकिस्तान. तो क्या आप हमारे लिए कोई ऐसी प्रोडक्ट लाइन, चाहे वो सारे कमर्शियल बैंक्स मिलके, बिग बिजनेसेस तो आपके प्रायोरिटी क्लाइंट्स हैं, बट क्या फाउंडर्स प्रायोरिटी क्लाइंट बन सकते हैं? थैंक यू.
So I think you have rightly pointed out. So there are few things which we are already doing. Few things, there are upcoming digital banks which will do. So I can talk about what we are doing right now. So we have rolled out a SME program and there is a lot of support coming in from central bank also, but of course the risk has to be taken up by the commercial bank, which is Mizan Bank. So we have that program rolled out. We are the largest bank doing the digital supply chain finance in Pakistan at this point in time. And all these small businesses which are doing some business activity with large corporations, we are funding them via a arrangement of a supply chain finance. So this is one thing which we are doing. Then Mizan Bank is acting as a sort of, you can call it a settlement clearing bank for a lot of these fintechs which have come up with their financial apps. So just connect it to us, and we do as somebody who do all the settlement for these PSPs and these small entities. In addition to that, very recently we have also tied up with one of the upcoming startup fintech, and we have yesterday, day before yesterday, means the last working day, filed an application with central bank for a startup grant which State Bank is giving to the banks, but we have signed it up with a small entity in a collaboration, and all this grant amount plus our own funding will go to that startup. So these are the few things which we have already done. Now one thing which we intend to do, which has not yet been started, is to earmark an amount to fund startups. So actually when you talk about it, actually what the young people are looking for is startup funding. Although no bank in the world do it, not even in US, it's actually the venture capital funds who do it. It's not the commercial bank's job, but still, because we don't have venture capital fund in Pakistan, we at Mizan Bank thinks that we have to allocate a small amount, and then we'll do some kind of competitions for which we'll be needing help from universities primarily, and then we will fund those ideas with a mindset that probably we'll lose a lot of money in that, but we will also enable our country, and maybe if there is one success out of 1,000, probably we'll recover our money back.
Thank you both gentlemen. They were both extremely impactful addresses, and what a way to kick off the afternoon. So now I would like to present some souvenirs to you two. So if you would please stand up, and I would like to request our co-host Amir Shahzad, Executive Director of Unity Foods Limited, to join us on stage, along with Usman, Director of Nutshell Communications. And the souvenirs will be presented by Mohammed Humayel Sajad, CEO of Mashreq Bank. Please give them a round of applause, ladies and gentlemen. And our first souvenir will be granted to Syed Amir Ali. Let's give him a warm round of applause, ladies and gentlemen. Thank you. And the next award will be going to Ahmad Mobeen. Round of applause, ladies and gentlemen. Thank you very much.